We can begin with the story unfolding right now. We're seeing this truce currently developing between Israel and Hamas, though hostage and prisoner swap expected to start soon. Maurice, do you believe that there will be a market impact here, or has this largely been priced in?
I mean, the market impact of this kind of events, and this one in particular, and in a way, sadly, as long as it is contained to a region, it doesn't have that much of a global market impact. What we can see is the fact that the kind of geopolitical premium that we had seen in oil prices is continuing to go down, also because of this delay in the OPEC meeting. I would say that basically we all hope for peace and the end of the violence. When it comes to market impact, I wouldn't say that it's obvious because, again, geopolitical premium, less in oil, but you can still see that gold is in high demand. So I don't think the market impact will be huge in any way.
Walk me through what we can expect from this OPEC meeting, though. I think this is really where the geoeconomic risk premium has been playing out over the last couple of weeks. No real supply impact as a result of the war, but the headlines around OPEC have certainly been moving the oil markets. We're going to see OPEC meet on November 30 now. Maurice, do you think oil has fallen far enough to prompt some kind of producer response here, or will we just see perhaps just that typical OPEC plus rollover expected at the end of the month?
Yeah, we are still in the camp of the second option you just mentioned. So I think that the OPEC is used to manage things very progressively with medium to long term goals instead of reacting to what is, to some extent, some noise in the market, because the oil is a very, very speculative asset, especially when you have all these moves in currencies and in geopolitical situation. If we try to look through the noise, we think that the supply and demand is still a bit supports oil prices somewhere between $80 and $90 for the Brent. This is our current view for next year, with probably a bit of weakness in the beginning of the year. Then we'll have questions about the strength of Chinese demand in particular, but overall we think that price will be supported.
So does that mean you're constructive on Middle East markets as well, if we see oil perhaps moving higher through the start of 2024?
Yeah, very interesting question. We are constructive structurally on some Middle East markets, and especially Saudi Arabia and the UAE, but it's not because we are biased. It's because of this, the Saudi Arabia transformation and the UAE becoming the kind of Switzerland. And it's all about the non-oil growth. I would say we focus more on that in our fundamental analysis. In these two countries, we're talking about 5% real non-oil GDP growth, which is huge and which won't stop. Having said that, we have this overlay of oil, of course, which matters for everything and which is more volatile. So currently KSA is, of course, because of the cuts, you can see an impact. Markets, to come to your question, markets tend to move sometimes for bad reasons, because our local markets are moved a lot by international flows, and sometimes people are very simplistic. They see oil going down and they sell the local markets, which is, again, not the medium-term story. So we are neutral currently on our region. We used to be overweight not that long ago. We took some profits on Dubai, up 20%, but we'll come back because the long-term story is non-oil growth and it's not broken at all.